you will be required to sign a buyer representation agreement prior to showing a home. How many agents stay in touch with their clients that they've served previously? Statistic, 91% of agents never contact their clients after closing. Like, how are you going to connect with those buyers? How are you going to educate them? How are you going to prove your value? How are you communicating?
Hey guys, Corey Frills here with the LTW Group, here for the More Than Mortgage podcast, our first episode since kind of revamping.
Woohoo!
Yeah, we're excited, and a very timely one too. So super timely topic. I have with me Shannon Foster Bowling, who is a past president of East Tennessee Realtors and also a very successful and a highly professional real estate agent. So super excited for her input, and a dear friend of ours. And then I have the wonderful Lisa Wiles.
Scared to see what you're going to say.
Look on me, so I was like,
Yeah, my partner and the best loan officer in state of Tennessee, if you ask me. Although I don't have hybrids.
Sometimes.
If it did.
Okay.
Thank you guys for tuning in. So today we're going to talk about the most recent NAR lawsuit happenings. So I don't even want to say the final ruling because it's not final yet. Well,
not final.
It sure kicked up a lot of dust, though, didn't it? Like, there's just there's a lot of noise out there. Everybody is just swirling around trying to figure out what is this going to look like.
Yeah, and there's still a lot of things we don't have the answers to. But what I will tell you is that there's a lot of misinformation, and while this is not all about giving you all the facts and figures, we're going to talk about some of the key points. But NAR has a great website where you can go and get the facts, and obviously you can look at your local association. I know East Tennessee Realtors has one. We have a whole page dedicated to it, and of course, hopefully your broker has good information too.
And this isn't finalized either. I mean, this is a living, breathing thing that's going to continue to evolve and change, and
we'll see.
Not much changes. Nothing's said and done just yet, right?
That's true. That's true.
I think to your point is there's going to be a lot of topics, a lot of questions, some that we uncover today that we don't have answers to.
For sure.
There are still things that have to change. I mean, the governing bodies and regulators are going to have to make some changes. We haven't heard from that, or at least send guidance and clarification on how we operate. So this is going to be ongoing, but we wanted to talk about specifically. I'm going to summarize it into 3 points. So specifically, we're going to talk about buyer's agency. We're going to talk about the decoupling, big word, of commissions from the MLS, and we'll go into what that means. And then 3, what does it mean from a lending perspective? So let's kick off with first and perhaps most important in our minds, the thing that's being talked about the least, which is the buyer's agency agreement and its role in this new environment.
Yeah. And I want to say before we do that, really quick, one thing just to think about is that there are a lot of people that are really upset with how NAR has handled this lawsuit. And I'm just going to tell you, I think they did an amazing job. Because they could have settled for $20 million several years ago, and they didn't. And if they had, they would have kind of left everyone out to dry, because that settlement would have only covered NAR staff and NAR as an organization. Whereas now, pretty much most all agents have been released from liability, but you need to check with your firm and your brokerage to get clarity. I'm not here to tell you you are, but the majority of agents and firms have been removed from any liability. So that's huge. So some of these concessions that we're talking about today came as a part of those negotiations. And the first one with buyer agency, I agree, is the one that I am not hearing much about. Again, if you read online and you hear different things, you'll hear people talking about, it's fine, this is an opportunity, or just get listing heavy. And that's kind of the solution. And to me, they're really missing the point. So what this really is saying is that you will be required to sign a buyer representation agreement prior to showing a home. And I just want that to sink in for a second, because, there's only 18 states that require buyer agency agreements to be signed, and it's prior to an offer being made. And not prior to showing, prior to an offer being made at a reasonable point in time. So if you go online and you read even like a Reddit thread, you'll see half of the people saying, I have people sign it immediately, to I wait till I meet them to sign it, to I sign it right before an offer, to I never use it at all, because there's so many states that either it's optional, there's 7 states where we have them, but it's optional, or 25 states where they don't have it at all. So that's massive. Like if you are not used to explaining to a buyer how these agency agreements work, how your commission works, what your role is, then not only having to learn how to do that, but doing it before you even look at a house. And that's what I hear people now talking about. Have you heard agents talking about that part of it?
You're basically negotiating for yourself, and you're trying out for your job at that point.
Yeah.
As a buyer's agent.
Before
you even get to go into action.
Yeah, right.
Yeah. So, the thing about that is what I've been thinking a lot about is, I've based my whole business off of making real, genuine connections with people. And I've sold a lot of real estate. I mean, I've done, and just to put it in context for anyone that's listening, I've done $250 million in lifetime sales. So I've sold over 1,000 houses. I've done this a few times. That's $250 million. So I've done it a few times. I've done it 1,000 times. And I've always structured my business to be balanced between listings and buyers. I started during the recession, and buyers were like, you couldn't, it was like looking in the jungle for an almost extinct species. Like there were hardly any buyers, had like 13 listings and, no buyers. So, if you try to say, I'm only going to focus on one component or one demographic, like I'm only doing luxury, I'm only doing condos, you can do that. But there's always a risk to that. So I decided pretty early on, and we have conversations about this, to be a little bit more of like a broader approach and balanced approach, and to base that off of really genuine connections. So
I have a dumb question.
Yeah.
Not to cut you off.
No, please.
But you said that a buyer's agent has to get that in place prior to showing. What if the list agent says, I'm not paying any buyer's agents, and what if somebody comes across unrepresented? At that point, is the list agent required? Because I know that a lot of agencies won't allow to be a facilitator.
Yeah.
Like what happens to that facilitation role? Is that gone now?
So
and that the list agent have to, what does that look like?
That's such a good question. So a couple of things is that technically you should only be facilitating if you already have a buyer's agency agreement signed with someone. Ooh, people do it wrong all the time. They have a listing, an unrepresented buyer comes, and they drop to facilitation. How can you facilitate? Because the idea of that is that you have a representation agreement in place already with 2 parties. So I generally, as a rule, don't practice facilitation. If I have a listing, I typically stay on the listing side. So the question is, facilitation will remain, but then you will have worked out your compensation with your buyer already, and you will have worked out the compensation with the seller already. So, that's already kind of been separated out. So I think the easiest way to answer that question is that if you are a listing agent and you have an unrepresented buyer coming, if you've agreed to a compensation with the seller that they are paying you maybe less than they normally would if you were going to offer a split, you've done yourself a disservice. And that's one thing I think listing agents need to think about. Why are you changing the compensation structure on your listing? Just to protect yourself, because really you're shooting yourself in the foot when you have an unrepresented buyer come. Because if I have an unrepresented buyer come, my commission for that listing does not change. I'm doing 2 jobs. Just because they're unrepresented, I'm still doing 2 jobs. So that's the first thing. Listing agents need to stop thinking, well, I'll just take care of myself. And when I see people say, oh, be listing heavy, to me it's like this flashing signal of, oh, I'm also going to just look out for just myself. Well, really, you're not. It's not a cost savings. The other thing is going back to buyer agency agreement. I have used buyer agency agreements literally since I started in 2009. I've always had them. I've always had them signed. And I started out at a rate that was probably on the lower side because I kind of knew that was what, was going to be feasible for me to get paid as a new agent, right? So I didn't start out kind of knowing that my buyers might be paying a differential based on what I expected to potentially earn. But over time and over my experience, and especially in the pandemic, I've changed. My rate has grown. And I'm like, this is what I get paid as a buyer's agent, regardless of what the seller is offering. This is my rate. And because you work with a lot of my buyers, that there's some processes you have to put in place, and there's some conversations you have to have. So for me, the systems I've developed over time, which is how I have the first call with somebody, how I do consultations, the buyer's guide that I give them, the way I create relationships, the way I establish my value, I've had a lot of years to practice that. And I am like steadfast in my use of that agency agreement. And I am steadfast in negotiating my compensation. So where I worry for a lot of my peers is that it's not that people won't, some of them may not do it. Some of them may say, well, who's going to enforce this and know if I sign this before I went in the first house, which I think ultimately that lawsuits can develop because of that. Potentially, I'm not, sure. We don't know the answer to is it who's enforcing or whatever, but I'm going to do what I'm told to do. I'm a rule follower, so I'm going to do that. And, I think going back to the original question is, how do you create that connection with a buyer from the get-go? And if you think about how you structured your business, this is a shocking fact, okay? Get ready. And it really is a shocking fact. I want you to guess. How many agents stay in touch with their clients that they've served previously? Like, what percentage of agents stay in touch with their clients that they've served?
In any capacity, mail, email, whatever.
Email, anything. Like, anything. Phone call, text message, email, events, whatever you want to do.
I would say because of automation, 75%.
So 75% of agents will stay in touch with their prior clients.
The wise thing for me to do
I know it's going to be less than that because it's shocking, but
the wise thing for me to do is go 74 because that's the other bias. I think but since it's not a competition, if it was, but it's not, I'll say 20.
9%. 91, and this is a National Association of Realtors statistic. 91% of agents never contact their clients after closing. And to me, I hate to even use the word past client because I try to keep everybody as a client for life. So once you're a client, you're always a client. But just for the sake of simplicity, we need to say past clients so we know that we're not currently actively working with them. So do you think, touch with your past clients, that you will have a stronger business?
Sure.
And 80% of my business has been based off, like, consistently over the years. Sometimes it's a little less depending on if I'm in a really big growth mode. Like when you're a new agent, 80% of your business is past clients. You don't have any past clients.
That's
but
right.
Depending on where you are, once you get it averaged out, it's between 70-80% of your past clients will make up your business. And do you think that when a past client sends you a new buyer to work with, that conversation of gaining their trust, establishing your credibility, providing value for them, and asking them to work with you by signing this agency agreement where they're going to potentially be responsible for paying you for your full fee is easier than getting a lead off the internet that you've never talked to before. So I feel like the agents who have really put a lot of time and energy into developing relationships and developing past clients will probably have a little easier transition with some of these things because a lot of their lead sources will be from people that already know them, which again is why saying, oh, let's just silver bullet be listing heavy isn't the answer, because your past clients aren't going to just send you listing referrals. They're going to send you both. So you need to put energy into being good at both.
And do the work, right?
Do your work.
And stay in touch with your past clients.
It's really, that's a whole...
I can't believe it's 9%.
9%. That could be a whole other...
In this age of automation, like, it's a no-brainer. You hit a button.
CRM.
And it could be out there.
CRM is the answer. You got to have a good CRM.
And here's the thing for me, honestly, the automated piece isn't the piece I use the most. I'm very
but at a minimum, right?
Right, no, at a minimum for sure. But for me, the one thing that's so obvious and so easy is I do 4 client events a year. I do one client event every quarter. And I text people and email people and call people. And when I see them, it's like you reconnect. I watch kids grow up. And that to me is like one of the really easiest ways and fun ways. Like it's fun. I look forward to it. It's fun to plan. It's fun to go. So there's a lot of answers to that. But back to the buyer's agency agreement before showing and your compensation. I think it's important that people need to decide what their value is. Like if you go to take a listing, I walk into that listing and I know this is what my fee is. This is what my brokerage fee is, but this is what my fee is going to be. And, it's negotiable, But at the end of the day, it's also negotiable, meaning I can walk away from whatever they want and they can walk away from whatever I want, right? So there's this, we're both negotiating, but I know my value and I know what I expect to be compensated for this service that I'm providing. And so with buyer's agents, I think you need to really sit down and reflect on what that number is going to be for you, because your client is going to be responsible for paying that number irrespective of if the seller's offering anything.
I think it was you, and I think you said it best. You said, if I can't negotiate for myself, how is my client going to know that I can negotiate on their behalf,
right,
effectively?
Yeah, absolutely.
And that is such a good point to make.
Yeah,
right?
For sure. And, I'll have to I heard that from somebody else a long time ago, a coach, and I can't remember who it was. So I wish I could give them credit, but that really stuck with me and I've taken that on. And I feel like the other piece of this is when you start thinking about your value, right? It's okay to get paid however you want to get paid. Like, that's the beauty of this. We've always had that ability. This ability to negotiate and get paid however you want to get paid is not changing. It's just that it's being very clear that as a buyer's agent, it's going to be a different scenario for you than before. And you can, as an agent, have them sign an agency agreement and leave that compensation section in Tennessee. There's a compensation section. You could leave that blank. But what that means is that you could be working for free. You could be working for $1. You could be working for whatever amount. Like, you don't know. If that's how you want to run your business, more power to you. But that's not how I run my business. And I know for me personally that I'm a full service agent and that I want to attract clients that, like, will you pay for Prime? Will you pay for the Hulu package or whatever where you don't have to watch ads? Are you willing to pay for valet parking when it's raining or when you go to a conference? Like, those are the kind of people that I want to attract because that's the kind of service I'm going to deliver. But other people might say, hey, I'm going to have a more value proposition. Like, I'm going to offer, like this kind of thing. So whatever it is for you, you need to decide and understand it, because as we've started to talk about, it affects their loan process. And that was one of the big questions I had for you guys when we first got this news was, what does that look like? Because a buyer calls me and says, I'm pre-approved. Well, are you pre-approved to also pay for my fee to the full amount, whether they have to or not? They may only make up, a part of it, or they may pay none of it if it's a house where compensation is offered. But they also may have to pay all of it because that agency agreement includes that, right? The way that it's written.
So I think that there's two parts to this. And there's, when we talk about what the buyer's approved for, there's the part of what goes on the pre-approval letter, which is the ticket for getting the offer in and accept it, right? But then there's the communication with the buyer's agent on how they're pre-approved. And I feel like that's something our team probably does better than anybody. With our details, we send the details to write your contract email. So
right.
when we pre-qualify someone, we send an email to our borrowers and the buyer's agent, and we say, hey, here's what you need to know. And it's got everything from what addendums we need to max seller contributions. So, like, what can the seller pay towards your closing costs for this particular product? And I think we're going to have to update that with another line on them that say, can agent comp be paid outside of, do they have the additional funds for agent compensation? But then also being specific, even in the letter, and we just have to find a way to do this in a way that's compliant and respectful. But in the letter saying, this letter is, because right now we'll write a letter where the buyer is approved for X, given the seller gives us X in closing costs.
Right.
The buyer is approved for $400, but I need $5,000 from the seller in closing costs.
Right.
And so we're going to have to put that into our pre-qualification process.
Yeah. And there's some ones where we've been able to wrap compensation into closing costs anyway, but it also means that, like, there's an additional, let's just say that a buyer already needed closing costs and now they need compensation to be wrapped into closing costs as well. Well, there's a limit on that. I mean, they can't just have, closing costs plus you're going to have limits, right? And
well, I think if I'm not wrong, it's not actually counting into that max limit. So if an FHA allows for the 6% seller pays, it's not actually going toward, but it's not being a part of that 6%. You can go above and beyond that.
Gotcha.
We're asking about this right now. So the guidelines are vague, and they say whatever's reasonable and customary.
And that's where we talked about earlier. There's so many unanswered questions, right?
That's right. So, like, for example,
many.
in Nashville, it's reasonable and customary, or it used to be before the COVID pandemic, and we see it some now. But in Nashville, the seller pays title expenses. Just what
Right.
happens.
Yeah.
So it is excluded from that calculation in Nashville,
Right.
but not in Knoxville.
Right. Yeah.
And so it's all about what's reasonable and
It's
customary.
fuzzy.
So we have Fairway and the Mortgage Bankers Association. So like you guys have NAR, we have the NBA, Mortgage Bankers Association has reached out very kindly and aggressively to the agencies, Fannie Mae, Freddie Mac, the conventional lenders, and Ginnie Mae, who does government loans. And we're like, we need clarification right now on when agent comp goes into those max contributions and when it does not.
Right.
So we've reached out. We're pushing on that, and there's some issues with that around, like VA does not allow for buyer's agents compensation to be paid by the veteran, and that's a problem, and it's really a problem now. And from what I'm understanding, the VA is getting
And I think
a lot
it's on
of
fire
mail.
right now.
Yeah,
Yeah.
they're getting a lot of mail that this has to change.
Well, and honestly, I've been sounding that alarm bell for the last literally 3 years. And the truth is that I haven't worked with really many VA buyers, and I recently, not in the past, and I hate it because, you know, I appreciate what veterans have done. My family has a lineage of service on both sides, but it's like I told a potential client recently, you know, like, I don't want to make your purchase about my compensation, but I am running a business, and you wouldn't expect to go to an attorney and ask them to work for free, and you wouldn't expect to go to the doctor and ask them to work for free. And the way that it's set up right now, not in the future, right now, is that if we go look at houses and they find a house where there's no compensation offered, then if I'm their agent, I've agreed to represent them, and I'm going to work for free. So especially during the pandemic, you could write 10, 12 offers, and then all of a sudden now we're not going to get paid. They can't pay you outside of closing. They can't pay you. There's no way. So it's been a frustration of mine, and I've been saying for literally 3 years, like, what are we doing as a NAR association to address this? Because it's bad for the consumer. It's horrible for the consumer.
So you're going to give a veteran 100% loan and then make them come out of pocket and have no options.
Right. And
Representation.
Yeah.
Or have no representation.
No representation. And that's
what
kind of what's
happens.
forcing. And I feel like also one of the concerns for a lot of people with the compensation for buyer's agents and listings and all this stuff, there's concern for a lot of lower income buyers that they're going to be pushed out of the market or pushed into unrepresented situations, which is why, you know, sellers really need to think long and hard about what kind of savings they really think they're going to get by removing offers of compensation. So, you know, with the veteran situation, though, it is really frustrating. And I hope that they get us an answer sooner than later, because literally this has been around for a really long time. It's just become more and more the forefront, especially as the market got more competitive. And so I really do hope to get an answer sooner than later. But with all these changes happening in July, it's going to be, you know, like anything, we're going to have some learning curves, and I think different methodologies will come out of this. So it's going to be interesting to see where it goes over the next year. The one thing that I don't like to see right now is a lot of people punching down and saying that it's, you know, designed to get agents that don't know how to perform out of the market. Like, here's the deal. I mean, this is the truth. Let's do some statistics again. Like I love numbers today. So 75% of agents. Yeah, right. Yeah, good. Okay. I don't love your numbers. I just like percentage. But so 75% of agents leave the business in a year. 87% have left within 3 years. So who are we pushing out, right? Like, there are people already getting in and getting out. And here's the thing is, like, I feel sympathetic to that, because, you know, you come into this with a lot of hopes and dreams, and you feel like you can do it. No one started thinking I'm going to fail, right? So we don't need to punch down. I just don't agree with that. These changes will present challenges for everybody, and you got to step up or not step up, period. End of story, right?
And it will become the new norm.
It will.
Any time we've gone through, and the mortgage industry has gone through massive changes, right?
Yeah.
And we get knocked around and knocked down a lot with all the changes that come across our desk, but it ultimately always, time after time, becomes the new norm.
Right.
And you just learn how to exist with it and maneuver around it and put it into your flow.
Yeah.
And so embracing it up front is the way to go, because it will be a new norm at some point. And the more you embrace it now and just figure out how you personally are going to be successful around it, that's the key.
Right.
Yeah.
Yeah, I feel like a lot of it's educating our clients. So for you guys educating realtors, which I know you'll do a great job of because you always put on amazing classes and CE and all that. And then a lot of it's going to be educating our customers and our clients as well to understand the benefit to them. So I think, for me, I already have 2 listings in the last week, and both of them are continuing to offer cooperative compensation. And just as an FYI, I've been telling clients for years, there's no set amount that you have to offer. You could offer whatever you want as cooperative compensation. And we have a dialogue around what they want to do and what's an advantage to them. So I feel like it'll be interesting to see how that shakes out for sellers. I have my own thoughts, but I don't want to do too much crystal balling because
a lot of it's going to be they will get their ideas from the leadership that's brought to them, right? The counsel that they
have paid for,
accept and pay for by their list agent.
Yeah, I mean, honestly, here's the deal. The goal is to sell your house for the most money in the shortest period of time. It's very simple. That's what most people selling their house wants to do. So what's the way to do that? So what's the best way to do that, right? And that's what they're asking us for. So you're right. So
that's the challenge, though. Okay, so that rolls perfectly into the next point, right? Yes. I think you read it there, too. So that rolls into the big word, decoupling of commissions from the MLS. Will you put that in terms that I can understand?
I will.
Okay.
And I have to say, when you say decoupling, every time I start thinking Gwyneth Paltrow with conscious uncoupling.
Bifurcation. Bifurcation is not a great word.
Yeah, that is a good one.
Underused.
Okay. All right. So I see if I can add that one in somewhere. But so decoupling basically means that the offer of cooperating compensation will be decoupled or removed out of the MLS. So in other words, you cannot advertise cooperative compensation in the MLS anymore after, we think, mid-July right now is what the time is. So what we understand that to mean is it can't be in public remarks. It can't be sellers willing to pay closing costs, including commission. That wouldn't be put in there. We don't know this is a fact, so I want to be clear, this is not a known fact, but I suspect that a compensation agreement would not be allowed to be in the assets file where we normally would pull disclosures. But I don't know that's true. Okay, that's just like, if we're thinking about it can't be in the MLS, then I would assume that would be something that wouldn't be allowed.
Well, because the reason is it could turn off that agent from even showing the property, and that's...
I think that has been maybe, I didn't follow lawsuits to the exact every single argument that was made. I think the point is that the big issue was there was claims that NAR was price fixing essentially, and that we were using the MLS as a way to fix prices. Sure. So what the settlement is saying is, okay, fine, we're just going to take it out of the MLS so there can't be any idea. So to your point, yes, it could affect, they could say, well, it's making someone not show, or you're still able to see compensation through this document. So it's still, in that vein, which, to be clear, NAR or realtors have never price fixed. That's not the case at all. But that was one of the basis of the lawsuit. So how are we going to do it?
How are we going to fix up the phone?
Yeah, I mean, that's the big question. And, my mind, just because of how I am, I think a lot about logistics because I'm a very process oriented. So once I find the problem and solution, then I want to create a process around it, because honestly, I hate wasting time doing the same thing over and over again. Yeah. And I like it to be efficient and smooth and effective. It makes it better for everyone involved. So how we communicate that with other agents, if there is an offer of cooperating compensation, right now, I mean, it seems like it would be a phone call, text messages, or some other format. Don't quote me on this, but I think you're allowed to place it on a third-party website, like your own personal website. But here's the thing is that if you put it in the MLS public comments, that feeds to, let's say, a third-party website like a large one like Realtor.com. Well, you can't do that, right? So if you don't put it in, and then you go to Realtor and you try to change it, my understanding is it's just going to get overridden because it's pulling that data. So I think it can be on your website, but then again, your website has an IDX that's pulling data from the MLS as well. So I don't know how much that's going to help or not. Again, I think these changes, right, create opportunity for new solutions.
Yeah.
You were going to say something.
Yeah, okay, so this is in my mind, and we touched on this a little bit on the phone earlier. Okay, so there is a cooperative compensation agreement, correct? Or there is a
Yes.
compensation agreement that is outside of the sales contract.
Correct.
Okay.
Between the brokerages.
Between the brokerages. Okay.
Okay.
So, for example, let's say it is this can apply for any loan specifically, but let's say for VA where it is explicitly no, veteran cannot pay buyer's agent comp. If you happen upon a listing that has that you call the agent says, sorry, we're not offering any buyer's agent compensation. Could you negotiate that comp agreement? Can you negotiate that with the seller and the buyer's agent? Can you negotiate that outside of the sales contract? So could you say, I have a buyer, they want to buy your house, they're a veteran. Veterans aren't allowed to. And the seller's like, well, I don't want to exclude a veteran from being able to buy my house.
Yeah.
Could you then negotiate that agreement outside of the purchase contract? Does that make sense?
It does. Well, I mean, you can, let's just say it's a conventional loan. You can negotiate it in the contract. The buyer
Right.
can
Yes,
put it in
correct.
as a special stipulation that they want the seller to pay for their agent's compensation as a stipulation. So I don't know that there's a rule against doing that same thing with VA. However, you could also use a cooperating compensation agreement where the seller agrees with their agent to amend the listing agreement.
Okay.
So first they would amend the listing agreement, and then that agent would sign a comp agreement for their brokerage to pay that amount at the time of closing. So I think there's a couple options as you amend the listing agreement. And theoretically, you could have a special stipulation in the listing agreement that says, we will only offer cooperating compensation to, someone using X loan type. But the
Okay.
thing is, you have to be careful that if you're putting something in special stipulations about we're only doing it for this or that it's, staying within fair housing guidelines as well, which, veterans aren't a protected class per se, but they could do it two different ways, really. So there is a big misunderstanding that you can't negotiate compensation in a contract. It's just, you just have to make sure it's worded correctly, like anything else. So,
I'm thinking about it from a lender perspective because if it's in the sales contract, then we have to deal with it.
sure.
Right. If it's outside the sales contract, we don't necessarily have to deal with it. And so along those lines of does it or does it not count into their what we call interested party contributions, if we're limited to 2% on investment property,
Right.
we got issues, right? If we're limited to 3% on a low down payment program, which is
Right.
going to be a lot of your first time home buyers, we're going to have issues if we have to negotiate a 3% buyer's agent compensation and then it be included in that.
Right.
The other thing I want to talk about from a lending perspective is
And just to be clear,
realistically,
you're not saying that 3% is what everybody gets paid, that it's not
No,
a set
I'm
fee,
not.
because we don't talk about
I'm not.
fees.
No,
We don't talk
I'm
about
saying
numbers.
3%. If
Let's not
so-
talk about numbers at all.
Well,
Just say,
From a
for
loan
example,
perspective.
Right.
on a conventional loan, if you're putting less than 10% down, you're limited to 3% seller contributions towards your closing cost in general.
Gotcha. And then
Only closing costs.
if you have an extra percent,
However,
However,
right?
and for
whatever
first-time
closing
home buyers, sometimes that's all of it,
yeah.
right? If it's a $200,000 house, that's $6,000, and you have that in fixed costs and mortgage.
Right,
It's all of it. So it is important that we figure out what all goes into that limit. But from a loan perspective, I think it's going to be, here's what I think is going to happen. I think that the agencies will give us some clarification on what will and won't go into the interested party contribution limits that I just referenced. I don't think they're going to update what kind of loan to value we can go to. That's going to be the issue. So your first-time home buyers that are putting 3% down, 3.5% down, or even no lending,
Not only down.
I think there's a misnomer or misconception in the market that if it's financed in, that it just goes away. Like, oh, just roll it in.
Right.
Like, people think that about closing costs, just roll them in. And while that's possible to refinance, you can't roll closing costs in on a purchase. It just doesn't work that way. The way it works is you put less money down and you finance more. But if you're already putting the minimum amount down, 3% or 3.5%, there is no financing in.
Well, I mean, you can offer more to the seller and then say, hey, seller, I need 3,000
Sure.
or 3% back or whatever.
But that's where we run into appraisal.
So
issues
it's built
potentially.
in.
Right.
But then it's only to what the appraiser will value that property at.
Exactly.
Then you're kind of hitting your head against the ceiling. Or do you feel like it's going to start pushing up the values?
Well, that's going to be interesting because if a lot of people start,
Trying to roll it in.
well, or if a lot of people say, well, I'm just not going to offer compensation, I'm going to drop the price of the house. You're dropping the price of the house, and then somebody else has got a different price, and we've got the same house, different prices, and appraisers are going to be looking at some of those things as well. So, I mean, again, nobody has a crystal ball as to how that's going to go and what percentage of sellers will continue to operate with the this is a benefit to me versus it's not a benefit. We just don't know. But I will say that we're, again, going back to the logistics and the process of things, how do I communicate effectively to other agents what the seller is offering? Because that is part of the benefit and how we market the property too. Obviously, we're going to be talking to other agents about all the things that go with the house, and that's one of the things that could be something of a benefit to their client, basically. And two, it's like, how do we make sure that when we talk to a buyer, right? Let's say that you call me as a buyer, Corey, and I'm trying to make sure that you're pre-qualified and you've agreed to my buyer compensation fee. I have to really make sure that that lender has included that full amount regardless of what's happening with the seller. Because, see, I'm making a business decision too.
That's right.
Because if somebody can't afford to pay me, then, what are you going to do, right? And that's why I said earlier, agents really need to decide what their value is and what they are going to be compensated regardless. Because then you just have to say, well, this just isn't a fit. It's not like you're being cold-hearted, but otherwise you're not going to have a business if you just don't set some boundaries. This is a really good time to practice boundary setting. Yeah. And explaining your value. And so what I am also thinking is like, I know with your group, when I call you, I'm going to get those answers right away. And not only that, you're going to be ahead of the game in making sure that I get those answers if people are pre-qualified and they're working with you. But if they're working with a really large lender that's out of state or a lender that's out of state that I don't have a relationship with and they won't pick up the phone on the weekend and they won't give me any information, it's going to be a lot harder. And while all of that is happening, this buyer just wants to go see a house.
Well, and at this point, the realtors need to understand that you're going to have to let us know what you negotiated for yourself.
Correct.
And we have to put that into our costs,
right?
Or we're coming up short.
Yeah.
And expectations, dreams crushed.
Yeah.
People upset at the closing table, and it's like, okay, but you never told us how much you're getting paid. That's going to have to be something that is...
Are you going to change your requirements to make agents send you that information?
100%.
We have to ask for it. We can't make anybody do anything but to properly pre-qualify someone.
I mean, I would think
it's going to be subject to.
I would think you would require buyer agent agreements now.
We're going to need it. Yeah.
I mean, I don't see how, because I feel like it's going to be a huge disservice to everybody if that's not clear up front. And the title companies are going to have to react to this as well. So that's going to be something that, I mean, they've always asked those questions, but I think that it's going to affect them in a different way too, which, this isn't about title companies, but I do feel like how we work with our lenders becomes even more important through these changes so that we avoid these kind of mishaps, because nothing would be worse than, especially on the listing agent side, that's the other thing I haven't even mentioned or talked about is I've got to protect the interests of my client. So if it's a situation where we know that this buyer is pre-qualified, but let's say, for example, the seller isn't offering this compensation, we've got to make sure that they're financially capable at a new level maybe than before, right?
Well, if they're putting 5% down or less, you're asking the question.
Right.
Hey, I see your pre-approval letter. I see you're pre-approved. Have you factored this in? Because we're not accepting this offer unless we know that's been looked at. And that's going to be on the list, agent, to take that extra step.
Because I don't want to get a loan. I don't want to. Here's the deal. You could say, well, the buyer's agents want to get paid. No, what will happen is they'll get a loan denial letter because they don't have the funds to close.
That's exactly.
And they'll have a valid loan denial letter, and then your seller is kind of hanging out to dry. So we can't just like wash that away and be like, oh, whatever. The buyer agent takes the hit. They didn't do their part. No, that's not how it's going to work. So these are the kind of questions that, like, again, things just, the more I think about certain things, I'm like, ooh, what about this scenario? What about that scenario? And I think some of it we're just not going to know till it happens. But like I said, I like to really be as prepared as possible and kind of think about how this can affect everybody on both sides.
Even more importantly, like, you need to establish a team around you right now. And you have to have clear, concise communication and transparency on how you're going to move forward with these changes so it's smooth to everybody else, right? Mm-hmm. But if you haven't established your team and you don't have that lender partner and that title partner that knows how you have decided to take that next step forward and how you want to do business, then it's going to be chaos because you're going to have multiple people functioning multiple different ways, and the ball will be dropped, especially if you get really busy.
Yeah. I love that you said team, because especially for the new agents out there, literally, when you first start out, who you partner with and surround yourself with makes a difference. Like, and I mean this when I say it, I'm not just saying this, but Lisa has been a huge part of my success. When I first got into the business, when I first got into the business, I was like, she is a rock star, and that's who I want to work with. And I was a new little baby agent, and there's so many things I didn't know, and this woman has explained so much to me, and there's still times where I'm like, why am I asking this question again? I feel like she's told me this before, but I ask because I know there's no judgment and there's just support. And I work with title companies where I know that I'm going to get the service for my clients. I'm going to get the questions and the tenacity that you need to have a lot of times. And, your lender, it's just not a product. I always tell my clients, when you work with a lender, you're working with a strategist. They're going to give you different products, but they have to be the strategist. And that's what, Lisa is so great at. And so you're right. Like, I encourage anyone who's been on my team or any new agents, like, you need to spend time with your business partners because they really are partnerships. And obviously your client chooses at the end of the day who they want to work with. But you also are the one that are, calling people, and you need support. And like, she's going to answer the phone for me, even if she's not the one doing the deal for me, if I have a question about something, so that I can get the right information. So your team is super important. And that includes your lender, your title company, if you do home warranty work at all, your home warranty person, your broker. You got a team.
Full picture. It's the customer experience. And
absolutely.
And you want to lift that up and make that as positive. Because that's your next deal.
Right. Wait, what did we say again? How many people don't stay in touch with their past clients? How much of that is that? So again, if you want to stay long-term in this business, most of the agents I know that are successful, that last in this industry, if you went out and asked them, I would bet money on it that they're going to tell you 70-80% of their business comes from prior clients.
Okay.
So it's so important to remember that. It's so important to remember that. And, people don't come back to us for a variety of reasons. I haven't kept every person I've ever worked with. We all have attrition. It could be that they moved with their cousin, got in the industry, and they want to give them a chance. Or maybe they just didn't gel with me the same way. Or maybe they just wanted to try somebody different. I don't always know the answers, but I know that that's the goal, right? Is to keep in contact and create those relationships so that people see you as that advisor, that you are that advisor, and that they want to work with you again. So that team makes a difference. It makes a huge difference.
What do you think? Just sitting here, popular, unpopular opinion, do you believe that this ultimately is going to be a good thing and a good change?
It's a great question.
Corey, what do you think? What do you think? I'm going to go ahead and just say I've never felt that transparency in somebody having to explain their worth is a negative. That's not negative. Now, all these other little things floating around it that are that seem chaotic to me, I don't love that. There's a lot of noise and there's a lot of chaos, and I don't love that. But ultimately, being transparent and negotiating for yourself and knowing your worth, there's nothing wrong with any of those points that have been made, right?
Right. And that's the thing for me is that I feel like I've been doing that since day one. Like I told you, I've literally used a buyer's agency agreement since I started in 2009. And I get them signed fairly early in the process, not before we saw a house, because, that seemed
excessive.
Well, it just seems like, I wanted to build a relationship and make sure it was a good fit. So now I'm going to learn how to do that differently, right? I'm going to learn how to do that differently. But the part of like talking about and setting my own fee for buyer side and all that has never been a concern. I think it's that there's so many sellers out there that have had misinformation that they can't pay fees. Like a lot of it, they think they can't do it at all. And that's not the case. I think when we get through some of the noise, as you said, I think the transparency is going to be great. I feel like some of this lawsuit was misguided because they think that it's going to bring home prices down. One of the arguments from the people that were suing, because I'm plaintiff, they said that commission was inflating prices, which is not the case at all. It's just so. I think when people realize that that's really not affecting prices. Yeah, it's kind of like a scapegoat kind of situation.
Like, think about that. If you're a seller of a house, now all of a sudden you feel like you used to have to pay arbitrary numbers 10, and now you have to pay 2. You think you're going to, I'm going to discount my house 8%.
Right.
That's ridiculous.
Yeah.
No seller ever is going to do that.
Well, there's a lot of, the point is there's a lot of misinformation, right? So, I think that there will be, like anything, I think there's going to be some good things that come out of it. I agree with the transparency part. And I think there's going to probably eventually be some changes to some of this. Like, what disappoints me, honestly, is that we have had a situation where there's 25 states that's never even had an agency agreement. So yes, I think it's good that it should always be clear who represents who, how people get paid. So yeah, I think that part is going to be great. And I think everything else, honestly, I don't think it's great the way it's set up right now for VA buyers. I think it could have a really negative impact on our lower price, lower income, and it could create a bigger wealth gap if certain things aren't changed, right? So I feel like that's an if these things don't happen. And my hope is, I give a lot of credit to NAR, which is the National Association of Realist Brokers, which is predominantly an African-American affinity group that was formed back in the 1960s because at that time, the National Association of Realtors did not allow women or people that were of color, African-Americans, to be members.
The 60s?
Yeah. So, but what's so great about that group, and there's other groups like AREA, which is the Asian Real Estate Association, and NAREP, which is for Hispanic Association. But I think these affinity groups are very key to making sure that they are fighting for marginalized groups to make sure they're not getting left behind. Because there is a larger gap in homeownership between people of color and LGBTQ citizens than there are, and honestly, with white homeownership. So I feel like that's one of those things we need to continue to fight for, and I hope NAR will hopefully step up to the plate to make sure that as well as the Mortgage Brokers Association, because housing should be for everybody. And we certainly don't want to create an environment. There may be transparency, but we don't want to create an environment where that's only serving a certain population.
So Freddie and Fannie over the last couple of years have doubled down on that first-time home buyer in the low to moderate income category, and they've created so many products to compete with FHA and the government products that are offered, and so they can increase home ownership in those categories, right? And so I think, what is their leadership going to look like through this? Because this is in direct conflict with what they have been looking to do over the last couple years. This is really going to put a strain on all of those new products and programs they've come out with. And of course, FHA and the Gardner loans have always had their head there. Like, we need to get that sector to where they can be qualified. So now, do you feel like they're going to step up as a leader in this and try to facilitate some sort of...
I hope so. When you ask that question, I think it's going to be a good thing. Like, my first thing that pops in my mind says, for who? Good for who?
Yeah.
Right? Yeah. And so to answer that question, and Lisa knows this about me, I don't love having opinions. I try not to have opinions about most
I love asking his opinion on things.
I just feel like I feel like there are people that are... I feel like holding few strong opinions is anyway, we can talk about that. I don't know enough about most things to have strong opinions. Talk about that. Okay. But this, I do think, I'm concerned for first-time home buyers in that, especially my generation, I'm a millennial, and generation before me, who is not a high-trust generation. We have trouble with trust, right? And so earning our trust is very difficult. And you're putting additional pressures on the millennial first-time home buyer or the Gen Z first-time home buyer in saying, hey, before I show you this house, you got to sign this agreement. That's just the deal. And here's this comp. And they haven't even... education is going to be huge because they probably haven't even talked to a lender yet, which is a huge problem. We have got to get them to talk to us first. Like, before you even think about looking at a house, you need to talk to a lender. For the buyer's agent purposes, do you have the money to compensate a buyer's agent?
Well, my policy, I think the one thing the pandemic did been a service to us was that pretty much most agents that I know anyways wouldn't even take people to look at a house without a pre-approval or proof of funds, because there was no chance that you were going to get that offer accepted. Even though contractually you have 3 days to provide a letter, no one's going to take it when they're getting 30 offers. Like, you better shine.
Yeah, that's right.
So with these, establishing trust and building those relationships, I think you're right. And we do have non-exclusive buyer agency agreements. So that's another decision as a business owner. I keep bringing this back to agents. If you're a business owner, what are you deciding for your business? Are you going to sign non-exclusive agreements? Because essentially you're saying, hey, you sign on with me, but oh, by the way, you can go work with Corey and go work with Lisa, and whoever shows you the house wins. And for me personally, that's just not how I roll. I don't work that way. So that's not something I'm going to do, but it is an option. And I'm sure other states may create different agreements, and who knows how our state may even change up our agreement a little bit. But yeah, no one wants to, most agents, I think there's this perception that agents are trying to push that paper across the table. That's really not the case. We very much want to build the relationship and establish that trust. I mean, I'm sure there's one guy or girl out there that's done that before where they've shoved it across, but the majority of people that I know and that I've worked with in this industry, very much to a fault, to the point where, like I said, they don't use that at all.
Yeah.
Because it's just I don't want someone to feel like they are forced into working like me. But it's not about forcing.
I think it's consumer behavior that I'm concerned about.
Yeah.
I'm concerned about consumer behavior because we've had such a hard time getting them to talk to lenders first anyway. And now you've added this additional layer, which may that could be a good thing. It could force them to talk to a lender first, because we talk about this all the time, and we will kind of close around this topic here because we're running out of time, but we talk about this all the time. The price tag on the house is not the list price. It is what you can pay every month.
Right.
Unless you're writing a check for it, it doesn't matter what the price tag on the house is.
Right.
And so it is really important that you talk to a lender first to determine what that $300,000, $400,000 house is actually going to cost you before you can go see it, before you get your heart set on it. And so maybe that will be a positive change.
I think that's good. And I think the pandemic kind of started pushing that along a lot more as well.
And for the lender to come up with the strategy on how you're going to be able to pay commissions and still afford this house that you want to afford.
And that's one thing when we talk about who it's good for, basically you as the buyer can instruct your agent, like, I'm not going to go see any houses where there's not a operating compensation offer of at least X amount. But obviously you're limiting your choices there, which again is a conversation with the seller. Why do you want to limit how many buyers can come here? Because here's the deal, going back to 2009 for the agents, this like get listing heavy strategy as some silver bullet. Hey man, if you have tons of listings, but nobody can afford to buy them, then that doesn't matter. So we have to stay balanced in our approach and create really healthy problem solving skills. And, you know, I feel like we're all kind of in this together, and hopefully that's how we can move forward. So team is important, understanding what the lawsuit covers, understanding that this is still not finalized, but this is what's happening. And if you follow me on social media at Shannon Foster Boleen, you will see me talking a lot to agents about putting systems in place now. Like, how are you going to connect with those buyers? How are you going to educate them? How are you going to prove your value? How are you communicating? And start doing it today. Like, don't wait until you're forced to in July. You're scrambling and got enough.
I love that. Thank you so much for coming. This was fun.
Yeah,
look at us.
So
our
fun.
first one.
It was so
Nice to
great.
meet you.
It's like coffee talk.
What a
But
great
we didn't have coffee. We just have water. I think next time you need to have like a more interesting beverage selection.
Maybe a Gatorade, because I'm getting hot.
Oh, yeah, it is.
It's a little.
It's
A little warm. A lot of great conversation.
Oh, you know, mortgage and real estate, so it's so exciting. It's hot.
I got a fan.
Are you guys
ready.
getting hot out there? 'Cause we're sweating in here. All right.
Thank you guys for tuning in, and we'll talk next time.